Let's look at what happened in the last 1 week, and the market had buyers coming in, and since Friday there has been a good bounce which has developed, which looks like typically what happens in a bearish market. And the background to this bounce was that the T2108, which is an indicator which is there in Warden, which is basically percentage of stocks above their 40-day moving average, and when it goes below 20, there tends to be a sharp rally or a sharp bounce, and these are zones 10 or 20. Readings below 10 are very rare, and this is what is happening. What you're seeing is there is a bounce which immediately developed in the last 4 days, like once it went, and this you can see it on the stocks or indexes. Like Friday is when the market started bouncing back, and more of the bounce was focused on the technology stocks, and also the small cap stocks have also been participating in this particular rally. As a result, there are tradable opportunities. There are a lot of tradable opportunities in the last couple of days. There are some good breakouts like PDD. There are a bunch of stocks which had good earnings, and then say crowd had very good earnings, and it reacted positively to earnings, but because of the market conditions, it basically was having this chop, and then now on Friday it had a breakout, and from that breakout it has been going up. Similarly, you had PDD which had good earnings here, and after that earnings and it had a breakout, Z scale, and there are a bunch of stocks like this which I had. So there's a tradable rally which developed. Now these tradable rallies are very common in a bearish market. Bearish market just don't go down straight down. In most of the time in this bearish market, what happens is there is a tendency for a bounce to develop, and those bounces can last for a couple of weeks, or sometimes in a couple of days only, and then selling can overwhelm them. So all in all, if you're looking for when is the right time to get aggressive, typically whenever you see T2108 going below 20 is when you should be looking at some of these kind of bounces, and also that is when, if you short aggressively, you're going to be likely getting caught in one of these vicious bounces. So at the moment this bounce continues, and more stocks had breakouts today, so we don't know how long it will last. My reading is 3 to 5 days, and after that there will be either the bounce will fail or there will be a consolidation. In the case there is an orderly consolidation, then we may get more follow through for this particular bounce. But at the moment, my view is short term bullish for the market, and we might also get this bounce developing into a larger bounce going into the year end or a Santa Claus kind of a rally, because most of the stocks have gone down. Technology stocks have been going down for some time. Sentiments have become very bearish, and as a result, it's an ideal condition for something like a Santa Claus rally to end the year.